Hey, market update. What's going on, man? How you feeling?
Whew. All right.
Yeah,
Hot. That's how I'm
it is
feeling.
another hot day. Another hot day, but that's what. It's okay. We're here with the heat speakers. They don't call us that for nothing, because we like to
True
make
story.
it flaming hot.
True
How's the
story.
week been for you, bud?
Man, it's been a rough one.
It
It's been a
is.
rough one.
Yeah,
which goes hand in hand with this market. But
it is
it
interesting.
is what
Oh,
it is.
hey,
Cheers to the
salute.
market.
Yes.
A lot of negative sentiment, I think.
Mm-hmm.
A lot of concerns, a lot of fear.
Yes.
We'll touch on that a little bit later.
Yeah.
But first, man,
Let's
let's hit
get
this
into.
market update. What you got? What you got on that
Yeah.
on that agent side, man? What the numbers look like?
Let's do it, man. Heat speakers, hot market update. So let's get in. I'm gonna start with the national numbers, guys. Nationally, right now, on year on year, market price, the average home price or sales price, I should say, is about 455,000. So, and this is
That's national.
nationwide numbers. National numbers 455,000, which is currently we're about 1% as a nation down from last year. So not too bad. As the months go on, or actually weeks go on, it's expected that we're going to go above next year. So just because what happened, I don't know if many people remember last fall, around August time, prices really dropped because the rates went up so fast, right? They went up over 7, and so therefore prices were dropping. So this year we're not really having that issue. It's more stabilized, even though rates are still elevated. Buyers are still buying, still, around the median and less. That's where majority of the transactions are happening. But a lot of transactions are happening, and the demand is. But so yeah, it's going to be expected to end the year in the plus nationally. Now, if you guys here locally where we are in Fresno, California, I'm going to give you guys a little bit of local market data. And also, everyone, before I get into this, whoever's watching, what I really recommend, if you're not an agent or if you're just interested in the market and what the average sales prices are in your area, please reach out to a professional agent in your area, because it's going to be case to case each market depending on where you are. Okay, so now for Fresno, the average home price, list price right now to date is we're sitting around $453,350. So that's to be exact,
Pretty on pace
453.
with national average.
Yeah, pretty on pace. And typically a lot of the data is similar to national, like as far as Fresno in general. Our market here is not too far off where the national numbers are. It's going to be plus or minus a little here and there. But the good news about Fresno, which is really different than nationally, right now or last year at this time, we were the average home or the median list price was 427,750. So basically, guys, despite on what the news and everyone you may be hearing, in Fresno we are up about 5% year on year as far as median sales price. I got to make sure I get that right. It's median list price is
Gotcha.
we're up 5%. So we're definitely in the plus here, and I think it's going to go up a little bit more year on year as because, like I said, last fall things went down quite a bit. But yeah, so we're looking pretty good. The median list of the new listings. So I'm gonna give you some data here in Fresno. The median new listings. So not the pre-existing ones that are for sale, but the ones that are just being listed. It's sitting around 407 as far as the new prices coming in. So, but again, right now we're up 5% year on year median sales price here at Fresno. Which is good. Last thing I want to give you guys, median days on market here in Fresno is 21 days.
21 days.
Yeah, so about 21 days, about 3 weeks. Pretty much is the median days on market. So basically, all in all, here in Fresno, we have a really we got a strong market as far as demand around the median price range and lower. As it goes higher, slows down a bit. The median and lower is kind of where we're having the low inventory, and that's what's keeping prices elevated, because it's still a lot more buyers than sellers now.
Absolutely. Yeah.
So here we're still in a strong seller's market. So my message to anyone considering selling or wondering, what's happening with the market locally. If you have a house, I would even say 500 or lower within that range. Maybe a great time right now to take advantage of it, because there's still a lot of buyers shopping, and there's just limited options for buyers right now. So you could capture nice little bidding for your property.
Yeah. Okay.
Yeah. So
Not looking bad.
not looking bad.
there.
Yeah. Pretty
If you're a
good.
homeowner, over
As
the
a homeowner.
past year, you've gained a little bit of equity there. Now,
How's the lending side,
on
man?
the lending side, we would really like to see those numbers go in the opposite direction, right? We'd love to see our home values increase year over year. You know that our national or our local average here has gone up.
Yeah.
Unfortunately, the rates are not moving in that same with the same positive effect. So they are
Today,
also
July
going
7th,
up.
where are we sitting at rate wise?
July 7, we're up over 7.
We are
We're
up
up
over
over
7.
7, 7.25, 7.375, maybe 7.5.
Mm.
The U.S. Treasury just crossed 4. Yesterday, I believe it was.
Got
So
10 year.
the 10-year Treasury crossed 4. And typically, the higher that goes, the higher the mortgage rates go. There's a lot of factors as to why all of these are moving, but just the overall general direction is that these are continuing to climb.
Yeah.
And they are getting higher, similar to last year. When the interest rates go up, we do start to see buyers back out. We start to see longer days on the market.
Sure.
So we might see some of these numbers change here if they continue to go. If we do see an 8% hit pretty soon, we could possibly see that. But over the past 6 months, from last year to this year, we have definitely seen an uptick in the rates. And really, what we'd like to see in an ideal world, we continue to get appreciation in our homes, and the interest rates for the money to buy them go down.
Right.
We want to see this go up, rates go down, keep this thing moving. Right?
Sure.
Keep buyers out there, keep the money circulating. Unfortunately, home prices are going up, obviously.
Yeah.
But so are the interest rates.
So are the rates. So are the rates. Everything's getting more
the money,
expensive.
the cost to borrow the money to buy the home is
Yeah.
going up, as is the home cost
Sure.
itself. So it's just a double whammy of difficulty and unaffordability
Yeah.
for a lot of buyers, unfortunately, in the market, which is probably why we're seeing the demand be so high, because even though buyers are being priced out or buyers are deciding to wait because of how expensive this mortgage payment will be, it still has not changed that there are more buyers than sellers.
Right.
So we can honestly afford to probably have more buyers step out and still have a supply and demand issue.
Sure.
So we're so low inventory that this really isn't impacting the prices quite yet. It would take quite a bit more of the buyers to just say, you know what, I'm out.
Yeah.
For there to be somewhat of an even supply and demand. So
Yeah.
I don't see that happening.
Yeah, and I think that's really what the Fed's goal is. They're just trying to get
It
the
is.
rates up, and then to my what I feel, and you can correct me if I'm wrong, but mortgage rates are staying elevated, I believe, because of the uncertainty right now. They're still thinking that the Fed is going to keep increasing the Fed rate, the funds rate. I think until that's stabilized or we come to a terminal rate, right? Once we know the Fed has stopped increasing the terminal rate, I feel that that's when we'll start seeing mortgage rates start coming down a little bit. Once they're kind of sure that there's no more rate hikes this year
Right.
or anytime soon.
And to be honest, I don't know that that's coming. I don't know that we're going to be getting continued months of paused hikes or hearing the Fed say no more hikes, because the jobs report.
The jobs report came crazy. It was a monster.
Right,
this
right. I mean,
week.
they were expecting a certain amount of jobs to be created. It was
think-
more than double. It was
I
more
think they're
than
expecting around 220.
right.
220,000. I think we came in like 497 or something
497.
crazy, like double.
So, and the way that they were spread out too, a majority of them came in hospitality, but a
Right.
large portion came in construction.
Yes.
So what are they building? They're building homes to
building
keep
home,
up
yeah.
with the demand.
Yeah,
So
and a
there's
little hack for some of the buyers out there looking. If you're looking to buy this year, you're in a position to buy. I would consider new construction, right?
Yeah, absolutely.
Because for one, they have the inventory, they have the houses available, right? And they're willing to make deals. They're willing to throw in benefits, but definitely seek another lender as well, like a mortgage. Broker like Mark or someone else as a comparison. But I would definitely see what they can offer you. They can give you some incentives, buy your rate down, maybe give you, cash towards closing or whatever to help out the purchase. So
Yeah.
they do have the advantage right now and have the power to do things like that.
They do, and you'll hear it from me. You probably won't hear it from any other loan officers, and I may see if loan officers see this, they may be like, "Why the hell is he saying that?" But
Because you're honest.
I personally, I tell every
nothing
single
wrong
one of my
with that.
clients that is shopping new construction, hear out the lender that they have in house.
Yeah.
Most of the times they're just a preferred lender, meaning that we are all playing on the same playing field. However, the builders are comfortable with those lenders, closing the deals on time, the way that they like them, at the values that make the whole deal work. So they have these partnerships, and if you use their preferred lender, and it could be U.S. Bank, which is an actual bank, or it could be a mortgage broker company, that is just preferred to that construction company. But if you use them, the builder themselves are the ones throwing that credit in. So a lot of loan officers I talk to, they're like, well, where the hell is this 15 grand seller credit coming from? How are
Yeah.
the mortgage companies giving them that? Sometimes the builders do own the mortgage companies, and it's a little bit easier to move those funds around. But majority of the time, it's the builder
Yeah.
taking a $10,000 to $15,000 pay cut
Sure.
on the sale of their home, but they don't care. They got
They-
70 lots,
Yes.
homes going up.
They can
take
do that.
Take 10 grand off each one to give it to you.
Yeah.
The builders are doing that as long as you're using somebody who they know can close.
Exactly.
And that's where that comes in. So I always tell anybody shopping new construction, hear out the in-house lender. Even, send me a loan estimate if hey, are these guys pulling my leg?
Yeah.
Are they blowing smoke? Is this a real thing? And I'll help you guys out. But majority of the time, they got some killer deals, man.
Yeah. So it might be something to check out. If you're a fan of new construction, again, not everyone is a fan of new construction.
Exactly.
If you're looking for a big yard, you got kids, you want to have,
Look elsewhere.
it might not be ideal, but it's definitely something to check into. So also, what were some of the things that people were saying? Some of the questions and objections. What are some of the things that you're hearing as far as buyers, on the loans?
On my end?
Yeah.
Okay, so I'm hearing it comes down to like I said, the affordability. When we run numbers, when we go through somebody's financial background to see if they're qualified, we find out that they are qualified based on the parameters, and the real issue is how much they're qualified for. So that affordability is huge, especially right now. So when I say that, the mortgage payment's a lot higher than people are expecting them to be, and that's because the cost to borrow the money to buy the home is more expensive. So mortgage payments are higher. Sometimes not doable at all. Sometimes they're not qualified to even pass to purchase at that price point. So we run into a lot of objections, mainly with preference. Preference is if they are qualified, and I say, yeah, you guys are good, 500,000, but this is what your payment's going to be. It comes down to preference, and a lot of times it is I don't feel comfortable paying that amount.
Got it.
Yeah. On the flip side, when I talk to them, oftentimes there are a lot of areas that in their financial background that they can alleviate some excess debt, that they can make some more room to be more comfortable to purchase a home at a price point that they want. I'm not trying to sell them at a higher one, but if they tell me, they come complaining, there's nothing at 400, we were hoping 500. Well, that sounds like a complaint to me. And if you're going to complain, I'll help you find a solution. But if you have non-negotiables, and again, this is on the flip side.
Yeah.
For some people, it's just too expensive, and they just don't feel comfortable. But on the flip side, the ones who are complaining, and you go, and I have all of their financial documents. A lot of times they have these non-negotiables. I can't sell that vehicle. Well, you have 3 auto loans. There's 2 drivers in the house.
Right.
Why can't you sell one?
Yeah.
There's a lot of non-negotiables as far as, well, I don't want to work that job. I actually want to buy the house and then quit and then go to this one.
Right.
If you're going to complain about not being able to afford more, then at least understand that you can't afford any more because of you.
Yeah.
A lot of times it's the market. It's
and then it shows
it's Biden, it's Trump, it's all this other stuff, but really it's you.
But then it shows the ones that are really truthfully motivated and really want to buy, compared to those that are just kind of interested in buying. Like, it'd be nice to buy, but it's not like I really want to buy. If it's so, I do see that as well.
Yeah.
However, on the other side, like you're saying too, another thing is people are considering buying now or waiting. So here's the thing, like we had mentioned before, you can wait, but just know that once rates do come down, and if that's what you're waiting for, once the rates do come down, you're going to get into a market where it's super competitive, even more than it is now, because now everybody's going to come off the fence because rates are down. If we get to 6%, 6.8, 6.9 or whatever, or actually lower, 6.1, 6.2, that's what's going to bring out more demand. So now you're going to be competing with other buyers. Prices are going to be driven up more. So you may want to think about, maybe paying a little bit higher price now, but getting the house you want, right? At least you're finding the house. And if rates do come down, you can always refinance, but at least you're not jumping into that super competitive market to where you're getting outpriced, outbid, and and it just kind of gets nasty. So
Yeah.
it could go either way.
Absolutely, absolutely. I tend to be on the more conservative side when it comes to other people's finances, so I will always let them know, you know, the option to refinance is always there. It may not be as beneficial as you hope if the interest rates don't come down as
Right.
quickly as you thinking they are, or somebody's telling you they are.
Mm-hmm.
So that's always something to take into mind too. And I honestly like that most buyers are looking at these numbers and saying, you know, I don't feel comfortable paying that. And some of them are. They're like, you know what, I can't afford it. That does, even though I make this payment, I'll still have $1,500 left over a month, which is healthy. It's more than the general majority of American public having an excess of over $1,000 a month from your income. So they can still do it, but they just don't prefer to. And I for one always advocate that. I always advocate feeling comfortable with your payment, not overextending yourself. You know, so I think probably in my office, if I have meetings, I may be the final person that makes them stay on the fence, but it's all right. They'll be back when the rates get better, or when they feel more comfortable, when they sell that car, when they pay off that debt, whatever it is. You know, they'll be back and they'll be more qualified. Just make the right decision.
Yeah, and it comes down
start off on
to
the wrong foot.
Yeah, and you got to figure out what's the true reason of you buying right now. You know, why? You know, is it look at the future? Like, what are you trying to accomplish? You know, if you do plan on being a homeowner, you know, you always hear like it's never a good time, no matter what market we're in. You know, 2020 when the pandemic broke out, everyone said, "Oh, it's not a good time, not a good time." But you know, we find out today that hey, it wasn't a bad time to buy then. You know,
it was not. Yeah.
So it's really the good time to me is when it's right for you. You can afford the payment, even though it might be a little high. You could find the house you love. And you can get into it. You know, everything else could work itself out later on. Like I said, when rates do come down. But meanwhile, you'll be building that equity in your home, right? That's really very important. That's a little nest egg, an investment in your property. You buy today. You know, we can expect, especially if you're looking to stay in the home, 8 to 10 years.
Right.
I wouldn't advise anyone to particularly buy in this market if they're looking to, you know, be in a house maybe 2-3 years only and then thinking about selling. I wouldn't advise it unless you get a killer deal, which is pretty tough nowadays. But just because we never know what's going to happen with the market. But if you plan on buying a home, at least 8 to 10 years, long-term hold, I would say go for it. That's more than enough time to refi prices to, even if something did happen, it could still the market could recover. That's still a lot of time there.
And there's buyers on both sides, you know, short term and long term. Just make sure that you're calculating your risk appropriately.
Yeah.
You know what I mean? So if you are short term, you know, you're playing a game, you just be ready, prepared, and capable of handling a loss. You know, if you take one, you know, so you don't have to worry about that as much the longer your timeline is, but some people are flippers by nature or by business, you know. So
well, yeah, flipping is different.
You know they're not going to stop. You
sure,
know, so,
sure.
Even
though that's slowed down quite a bit, just because there's just not a whole bunch of options out there.
Those margins have definitely got thinner.
Definitely got thinner.
Those flips.
Yeah,
but they're still doing it. You know,
it's still there. People are still doing it. Still, people are still buying and selling like normal too. Even though I think the low for the year we're sitting as far as transactions wise around 4 million and 20 or something like that for the year. Annualized, correct. Last year we did around 5. Year before I think 6. So with the elevated rates and other factors, you know, it's just slowing the transactions, even though people are still buying.
Right.
So
yeah. Okay. And for you, man, I know we face a lot of these, and on the lending side, majority of the time it's debt, it's payment. Those are the objections and the fears, the concerns I'm seeing. From just a home buying standpoint, before they even get into their financials, what are you hearing from your buyers, and how are you handling?
Yeah, you know, I just heard from a buyer the other day, or actually yesterday, I was talking to them. Their concern and even fear was about buying was that they were under the impression that home prices are going to start going down. I'm sure there are quite a few people out there that is feeling that, and I get it, because just so you know, they're not going down. At least in our market here in Fresno, again, we're up 5%, and I believe we're going to keep going up year on year. But to address the reason for people's feeling that way, a lot of it I think is because what the news is reporting. Understand, guys. The news and a lot of these media outlets, they report from the Case-Shiller. So Case-Shiller historically has been giving real estate data and statistics for many years. I don't know, 50 years or however long, right? So that's the one a lot of times that gets reported and information out there. However, the only issue with the Case Shiller report is typically 3 months behind. It's always like old data, 2 to 3 months later. So now I'm sure they're reporting on where we were maybe back in where we see April, April, March, or something like that, where year on year nationwide, we were down. We were definitely down, year on year at that point. But it has recovered since then. Nationwide sales price, I just gave it the stats a few minutes ago. We're just down about 1% now, but as we get through August, it's going to go higher than it was last year, just because last August, things tremendously went down. That's when the rates went up. So we will be expected to go up year on year, especially within the next couple of weeks. But again, it's real estate is more local. I would say just check your own local area because it's going to be different numbers,
Right.
different stats for your market. I can speak about Fresno again. We're looking good year on year. So that's what I would say. And there's no sign right now, guys. Here, Fresno. Even nationwide, there's no sign by economists or real estate professionals that we're going to be down year on year towards the end of the year. So to answer those questions, we're going to be up.
Yeah.
So to anyone that's having concerns about home prices, we're looking good just because it's again a supply and demand issue around the media.
What do you think about the
Now,
time on the market? What do you think about that?
and let me just say this one thing. Now, the higher end, the luxury market or the higher end of the markets,
down.
that's where you're going to start. That's where we're seeing the price reductions. That's where majority of the pain is, as well as the commercial real estate. But that's a whole nother topic. But yeah, the pain is at the upper end of the market. But anything around the median, which is the average, the median sales price of your market and below, I would bet that prices year on year are up. It's very competitive,
Yeah.
and it's just because it's just not much out there.
It's affordable.
And yeah,
More affordable.
yeah. I haven't researched it, but I did hear from an economist that right now, affordability wise, is kind of like where we were. I want to say, was it the 90s? I want to say like 90, mid early 90s, something around there. It's kind of this where we were then, like as far as affordability, how much of your monthly gross is going, your income is going towards your monthly mortgage payment. So we're kind of like where we were in the 90s in a sense as far as affordability.
Really?
Yeah. So again, like I said, it's not the most unaffordable it's been, but yeah, it's a little tougher. But rents are up as well, guys. So if you got to live somewhere, unless you've been in renting for a while, then you're probably paying less than the median rent. But I mean, if it's a decision of going to rent a home opposed to buying a home, I would strongly look at buying a home because I mean, as long as you can get past the down payment, and there's programs for that too. So
Yeah.
tell us what some of the products that are available maybe for some buyers who want to buy, but they feel maybe they don't have the down payment. The rates are just too high for them. There's some options that as a lender you could offer them. Good, that different options like a buy down. I mean, there's other
Yeah.
products out there that could consider.
Yeah. So if the down payment is the
Arm.
hurdle, there is assistance programs for those, and a lot of times the borrowers, the buyers that hit me up about those, I mean, they hear the good stuff, they hear what's in bold, or they read what's in bold, they hear what's told to them on TV or through a family member or something, and the overall pros of those programs is that yes, if the hurdle for you buying a home is the down payment and saving that up or having that come out of pocket, because it can get pretty high depending on the home you buy and closing costs and stuff like that.
Yeah.
Getting that covered through a down payment assistance program is possible, but the lending requirements change when we use a down payment assistance program. So they more than likely will want higher credit scores. They won't allow you to carry as much debt into a home purchase as they would if you brought your own money in. So it just becomes a lot more stricter to buy. You cannot have a co-signer on the loan that will not be living in the property on some of these down payment assistance programs. So there's a lot of different things that we have to factor in when we're looking at down payment assistance programs. But if you fit into that bucket, fantastic way to get over that hurdle.
Yeah.
If the other hurdle is credit score, I highly advise you seek a professional who can help you remove some of these derogatory accounts. It doesn't take a whole lot of improvement on your credit report to get your score up. So if that's the hurdle, there are people and there's information out there to help you. Even myself, you can reach out to me.
I was going to say,
I
yeah,
know
they can
some,
reach out to you. You can
for
get them in.
purposes of a mortgage.
Sure.
Yeah, I'm like, yeah, okay, if we need you to get to this and this and this, that'll help you for mortgage. But if you just want your score up, there's a lot more as
right.
far as disputes and stuff like that
Right.
I don't really expertise in. But
I do have a contact, guys. If you ever are looking for credit repair, just reach out to us, and I'll give you a couple.
Likewise.
I know some local people here that can do it.
So if that's the hurdle, then there's a lot of actionable steps you can take. Does require some discipline. Some financial discipline to really one, become aware of what the problems are on the credit report, and two, take action and attack them.
Yeah.
But if the hurdle is the two other areas, which is the debt and income, there's really not too much we can do on that point. If you're having issues with not making enough income, if you have issues with carrying too much debt, really, that comes down to it. Just straight open up your books, take a highlighter, and just highlight what needs to go in order for you to qualify for a home, if that is a goal of yours. But again, goes back to what I was saying earlier. A lot of people have those non-negotiables that they will not do. They will not leave this job and go to a higher paying one. They won't get a second one. They won't sell a car. They won't, they won't sell the car, make some money, and pay off the credit card. They'd rather sell the car, keep the money, and then blow it. So there's just a lot that goes into it as far as mindset. And I think when you have that mindset that these homes are so unaffordable, it's ridiculous, there's no way to do it, you kind of cut yourself off, from even exploring these options.
And honestly, Mark, any market, really, any real estate market, a person can talk themselves out of buying. There's always going to be something unfavorable in every market, regardless,
or
right?
Any incident, any
situation, any real estate market, any time of year. If there's a reason in the back of your head you're interested in buying, but you're not committed or really want, or you're not willing to risk, sacrifice anything. You can find any reason, right? So again, the question should be maybe to yourself, what is the true reason of buying? Do you understand the long-term benefits of it, right? And what it could bring you and your family. And if it's something that you see as a goal and something you really want to accomplish in your life, the time is now to, at least, even if you don't qualify for now, the time is now to get the information, get educated, talk to lenders, talk to agents. You can just talk, right? It's not like you guarantee you have to buy right now, but start getting the information, start learning the process, start, getting real information. Another thing I want to touch on too, I'm glad you brought it up. There's a lot of noise out there. A lot of people I talk to are, when they're a little afraid of something or having these objections or questions, it's because of what they hear. Like you said, a relative. They're hearing some of these YouTube doomers, or there's a lot of articles, a lot of media outlets that aren't telling the full story. And again, a lot of people are just looking at the headline, right? People, if you go off a headline, you'll always be confused, and you'll never have a true idea of what's really going on in the market, because headlines are there for you to read and click on, right? And then once you do read the article, you realize, it's not as bad as what they were saying it. Or I would say, better yet, go to true professionals. Get real information of really what's happening in your market. Do not depend on the family. Do not depend on just media headlines. Do not depend on YouTubers. Look at your market. Talk to a real estate agent, a couple of them. Get a couple different ideas. You can, or economist, or someone in the business in your area that's going to give you true information. So I think that's a lot of it. A lot of people are just going off of what they hear and see.
And there's no curiosity there. They're not asking, why are they saying that? They're not asking, how is that possible?
Right.
They're not asking, how can people do the opposite? If they're saying everybody's falling into this bucket, well, why are there some that aren't? They're not. There's just no.
You don't get the
curiosity.
full story.
Yeah, there's no curiosity there. So you're gonna read one thing and be like, oh, well, I don't really care about it. I'm not gonna buy anyway. So then they just perpetuate whatever they hear and read.
Yeah.
And unfortunately, that's just the way the world goes. But if you really truly want to buy a home, and you are running into these issues, even after you speak to somebody like me who says, hey, you know what, we're not quite there. We're looking at about a 12 to 18 month period before we can get to where we're qualifiable. Even if you hear something like that from me, and it's an honest analysis of your background, that don't take that and say, well, 12 to 18 months, that's the best I can do.
Right.
If I give you actionable steps and I think it's going to take 12 to 18 months and you bust your ass and you start doing more overtime to pay off some of these things that I thought would take a little bit longer for you to do it. If you use all of your income tax returns to pay off this, and you save more, and you sell something and you put it away for savings, 12 to 18 months is just what I'm seeing at that time.
Right.
So there are some that will sit on that and be like, well, I can't do anything. I can't do shit for 12 to 18 months. That's what he said.
Yeah.
And there are some that say, well, 12 to 18, that's too long.
Yeah.
I might as well just, by the time the home's going to be $1 million, I'm not going to do it at all. And then there are some that do 12 to 18 months. No,
but again, it's never too early. And here's okay. Go ahead.
Yeah, there's some that are like 12 to 18 months. No, that's too long. What can I do to speed that up? How are other people, especially if they're like in the same workplace, they're like, how is my coworker buying it, but I'm not? At 12 to 18 months, that's too long. What can I do? So there's like 3 different responses, and a lot of people they fall into that bucket, and typically the ones that don't care, they're the ones that are spreading this. No, it's going to crash anyway, so who cares?
Right. So again, you can go with the masses and just and probably end up never buying because you're falling for all the negativity out there, which a lot of times is not the whole picture, is not all the facts. And and again, you guys, everybody's situation is different. Your friend or your buddy or someone else, it might not be a good time for them. However, you need to look at your own personal situation. It might be a great time for you, right? Take advantage of it. So I would just say get them information. Again, if you're 18 months out, even 2-3 years, and you're a first-time buyer, never too early to reach out to an agent or someone just to start understanding the process, just learning it. So by the time you are ready, you'll be a pro at buying. You'll know exactly what to do first. You'll be familiar with the whole process of what happens, and then you'll just be you'll be in a better position for yourself.
Yeah.
So that's just my take on it.
Yeah, no, hey, 100%. And to really simplify it, I see this I always think about this. I don't know, I'm a weirdo with my mind, but I always think about this when I'm driving on the road and I see cars that like want to switch lanes.
Yeah.
And in my head, I always see this happen. The driver will, they'll turn their blinker on to get into the right lane, but while they're turning on the blinker, they're also turning their wheel. So they're like, the blinker is on at the same time that they're making the move, not even looking over their shoulder really. So like these drivers, they'll turn it on and there's no there's no planning, there's no nothing, just blinker's on, I gotta go, right? And if I can't go right now, the blinker comes back off. It doesn't waste your gas to leave the blinker on. It doesn't hurt your car to leave your blinker on. It actually lets everybody know where you plan on moving your vehicle on the road. So it's okay to turn your blinker on ahead of time, right? It's okay to be prepared to switch lanes. It's okay to let everybody know around you that this is what I'm preparing to do.
Yeah.
But it doesn't happen. And when I see that, I literally, I don't know, like I said, my mind is weird. But when I see that and I see drivers do that, I attribute that to people's mindset. Like, oh man, if you just put your blinker on, you want to buy a house, put your blinker on. You don't need to switch lanes right now.
Yeah.
You're letting me know that you plan to. You're letting your realtor know that I plan to.
Yeah.
You don't need to do it now. But when you watch drivers, while they're turning the wheel, blink, blink, oh shit, and then they turn back, you're like, calm down.
Yeah.
Calm down.
That's a great analogy, man.
Yeah, figure out a plan, put it together. Switch lanes.
There you go.
It's
That's
that
it.
simple. But
It's never too early to start.
Crazy.
I think maybe sometimes buyers or first-time buyers, they may feel like if they contact someone right away, then they got to be committed or they have to buy right now, and which is completely false. So just so you know, guys, it's really just getting the information, research, get all the information you need. That way, when it is your time, you'll be comfortable. You'll know exactly what's going on for the most part. Shoot, you might even be able to tell your realtor a couple things. Like, hey, when is this happening? Aren't we supposed to do this? Oh yeah, you're right. So it's never too early, guys. One thing before we let you go, I do want to mention that if anyone is interested in a monthly report, I send out a local market report in Fresno, Clovis, on what's happening in the real estate market here locally. Home prices, if it's a buyer's market, if it's a seller's market, all the information. If you're interested in something like that, receiving it about twice a month, reach out to us. Reach out to me, inbox us, let us know, and I'll definitely make sure you get those emails twice a month. Again, I won't spam your email. Those the reports go out every 2 weeks. So that way you'll be in the know of what's happening in your local market, Yeah.
There you go.
That's Anything else you got, man?
No, man, that's good, man. We got a short one today.
Yeah.
But the reason for that is this market is demands it. It demands
Right,
the
yeah.
professionals to be involved, and
Yeah.
unfortunately, that's where we spend most of our times nowadays. So
That's it. So catch us every week, guys. We're going to be doing these
Absolutely.
market updates, heat speakers, market updates every week to keep you updated on the latest real estate news, what's happening locally, what's happening nationally. Again, if you guys are interested in that receiving a report every 2 weeks, reach out. We'll definitely get you on the list, send it to you. Anything you want to add, my
nope,
friend?
all good.
Yeah.
Yeah,
Okay.
that's it.
Sweet. Well, catch us on Instagram. Oh, should we tell them about the shirts, or is it a little? You want to talk about?
Oh,
If anyone.
well, let's
yeah.
wait till we get them in, then we can
Okay. Gotcha.
showcase it right
Yeah,
there.
we
and then.
got some stuff coming, guys. Some
some
merch coming, and
stuff coming.
yeah, we're gonna probably the next show. We should hopefully have them by then.
Hopefully, if not the next one.
Not the next.
Yeah,
Right,
yeah.
right. Awesome. All right.
All right, fellas, ladies, thank you for tuning in. See you next time.
Heat speakers.